Casey's Corner, introducing you to small businesses in the East Valley. Brought to you by Prosperity North Advisors, a Kendall insurance agency, protecting your prosperity. Hello everyone, Casey Kendall, Prosperity North Advisors, a Kendall insurance agency, protecting your prosperity. Joining me today on Casey's Corner, AJ Mendoza.
Sir.
Thank you for having me. This is your office is beautiful. You got the background. I
Get the little mural going on.
I love it. I love it.
Yeah.
So, AJ, again, thank you for having me. You are the CEO of Ethos Home Loans. Tell us a little bit about Ethos. Tell us about yourself.
Sure.
And how you got started in this.
So Ethos we're a mortgage company. We're a hybrid bank. We can get into that a little bit later, what that means.
Sure.
Essentially, we built the firm so that we'd have a lot of different products, a lot of different options. We started Ethos about a year and a half ago locally here in Chandler. So
Nice.
our headquarters is here. Most of our leadership is here. We have another CEO of sales, and he's in Long Beach. A little bit about myself. Well, there's a lot, so I'll be brief. Was born in El Paso, Texas.
Cool.
So, Texas guy. I moved here to Arizona. God, I want to say it's like 88.
Nice.
Yeah, so 88. And
So you've seen a fair amount of change over the
absolutely,
past.
man, absolutely. I went to Conley Junior High. I don't even know. I've driven there many times. I went to Conley. It was like Conley Middle School. I think it was middle school. But I went to Mesa Junior. So I call Mesa my home. So because Mesa is where I have a majority of all my best friends.
Sure.
And circle of friends that I've kind of grown up with. But so career-wise, I started off, working for Charles Schwab. I had a gig at, do you remember, I don't know if you remember Jeans West and
That
Baker
doesn't
Shoes.
sound familiar.
Yeah,
No.
Baker Shoes. So all the females would know Baker Shoes because everybody went to Baker Shoes or 579. I don't know if you guys will see that, but so I was doing as like an assistant manager there, and I got held up. It's a true story.
Mm-hmm.
So I got held up, and I was so tired from the night before. You were young, and
Wait a second. Like somebody mugged you?
well, they tried to.
Okay.
So they tried to mug me, but I was so tired, and so the guy goes, and remember when you go to the mall, they had those big old fences or whatever, metal fences.
Yeah.
And so I'm opening the door, and I've got, and those are working retail. Back then, you had to go and set up your drawer, and then you'd have to take whatever the deposits were to the bank. Right?
Sure.
So the guy comes in, and I just didn't want to deal with it, really. I was just like, look, I got no money here, man. We're at Christown Mall, which is now Spectrum Mall. I don't know what it is now.
It's condos now.
Yeah, is it condos?
I don't know. It probably
I don't
is.
know. But, so anyways, long story short, it hit me later that day that guy could have shot me. Man.
Sure.
So called in a favor for a buddy that worked at Schwab, and that's how I got into financial services. That was back in, I want to say it was like 94 or 93.
Wow.
Yeah.
Okay, so started off at Schwab.
Uh-huh.
Okay, so especially in '94. Mm-hmm. So you've got coming out of the '80s, which was essentially a boom.
Oh, that's great, man.
But then '90s a little rocky. You've got the savings and loan scandals and those types of stuff. Tell us how now. Brown cow. No, how now are you able to leverage that type of investment experience coming from a background like Schwab, which for all intents and purposes is really a now they'd call it a registered investment.
Yeah, registered broker.
So how might you leverage that experience into what you're doing now in home loans?
Well, I would think. I started at Schwab, and I was a trader there. I started in the mailroom, so I'm a Series 7. It wasn't really until I left Schwab that I say I got that knowledge on how to leverage on what the market is, right? So it wasn't until I went to go work for like Prudential Securities and I got a really good sales background and learned about insurance and how to do that. But I think that knowledge now, I mean, back then what I acquired, makes me effective when when I'm dealing with not only the firm's finances, but gives me an outlook on what the market looks like. Because I think I've been through like 8 bear markets.
Wow.
And so, that gives you a level of, I don't even want to say security, but it gives you a level of hey, you know what, we're going to get out of this. And, you start seeing repetition.
Cycles.
So, yeah, there's cycles, right?
Essentially,
cycles. And so essentially, I've found and I've come to learn that anytime there is a down cycle or there's a kind of, it looks like some people would debate we're in inflation now, but there's a lot of opportunity in that. And so I look at it differently. I think of it as a time of opportunity versus the opposite, right? So that's what I would say, mostly what I've gained from that, other than from a technical aspect is helping my staff understand what stocks look like and what annuities look like and other information that helps them on the qualifying side at the loan level. But I think all in all, it's gave me a level of foresight that I think is necessary for a CEO.
So essentially what you're doing is when you're working with your clients, you're able to examine the situation as a whole, not necessarily just focusing on either budget or one specific aspect of it, but by saying, let's put together a plan. So talk to us about that process. Is it a transaction or more of a 12, 24, 36, maybe even 60-month plan?
I think I've seen a lot of things out there, right? I've seen a lot of really respected loan officers and firms. And, I think from a granular level, I think everybody seems to feel how it needs to be felt, right? So it really needs how to be done, how it needs to be done for that individual. I think everybody has one appetite. And some people do like to have one thing. They want to get one thing done, right? They want to get a refinance or they want to purchase. But what we try to do is we try to be more consultative than transactional. And the reason is because, being a financial advisor, tying that back, when a loan officer qualifies a customer, they have the entire financial footprint of this applicant, right? So, we're dealing with, asking questions about, do they have any life insurance? Do they have, any kind of college planning? What,
Sure.
Right? And then for other assets, hey, do you have any 401k somewhere else? And people might say, well, why is that important? Well, it's important because, if you have some of that knowledge and you have referral partners, such as people that are in insurance business, I mean, I'd say about 50% of people are uninsured, right? I mean, when you talk about life insurance, we could talk about financial pyramids and what should you have first, should you have reserves, I happen to believe you should have life insurance before you have that. But that's just my opinion. But tying it back to your question, I think it's really depending on the one customer. We're in the business of meeting the customer's need, right? So we pride ourselves on tackling challenges and ensuring those challenges at that point, once we meet those needs, we're able to kind of tie those back to one another. So that's our main goal, is to satisfy our customer. We obsess over that. Like, I obsess over customer experience. Like, that's our main thing. The other thing is, we really want to focus on customer acquisition because we know how important it is to our real estate partners and our referral partners. So we help them participate in brand awareness for them. We do a lot of different things.
Yeah, absolutely. And so I think interacting with not only your partners that are out in the field that have a pulse on the market, but then understanding anybody that they bring with you and how you can help in their situation. And I think we'd be naive to say that every situation is exactly the same or even similar to each other. I talk to a lot of mortgage people.
Sure.
I talk to a lot of real estate agents. And I think that there's a lot, obviously there's a lot of information out there. But there's also a lot of, I guess the buzzword right now is misinformation.
Oh, yeah, there is.
Right? So I don't necessarily want to dwell on it, but you mentioned being a part of, I think, 6 or 8 bear markets, which the way that I remember that from the investment world is bulls run uphill and bears run down. So when you look at that situation, either somebody that's new coming into the business, this is the type of market, or at least on the brink of the type of market that could really separate the men from the boys, so to speak, to cliche that out, cream and rising to the top and such. So what can you, as a professional, do to recession-proof?
Oh, wow. Well, I think one, all that notion of, it's like, well, the men and the boys or men for the boys. Down markets happen all the time. They just don't happen at one certain part of time. There could be a different, a down market in a certain segment of the market, right? So, in real estate, there's so many different levels that really are, could be different from another price point or whatever. So I will say this, for anybody new jumping in the market, think of yourself as an entrepreneur, and it really doesn't matter what the market's doing. It's more what you're doing as a person.
Interesting.
Yeah, and because, we've set up our firm, and there's many others, right? And we'll get into a bad lender or a good lender and what that all means, but, we've set up our firm to be able to say yes to a lot of different scenarios. Bad credit, or what you call as bad credit. Some people say you might have a 550 FICO, but you have bad credit, right?
Right.
What happens is a lot of people get into an adverse event, and I just want to touch on this because we had a conversation about this earlier. Somebody might have an adverse event, i.e. a BK or whatever.
And something like that can be caused from a divorce or a death, loss. Yeah, there's a number of different issues that could really lead to that.
We're kind of phased out by automation, a lot of things. But it doesn't make you a bad borrower. What it does is that, some individuals don't like to utilize credit. They just don't. They had a bad event. They don't want to get in the event again, so they don't take any credit out, right? So they don't have no credit, so their scores are bad, or they're low, right? So we're able to transact with applicants that have a 500 FICO score.
Wow.
Okay, and the reason we do that is because we believe that, for one, from a customer acquisition standpoint, anywhere from 6 to 7 applicants out of 10 don't have the FICO score to qualify.
So let's.
That's just that one piece.
Right. And I mean, it's kind of like reading the fine print of a car commercial, and they say, hey, you're going to pay $399 for this car for 36 months, but when you read the fine print, you've got to have a 775 credit score, and you've got to put so much down. So when you say 500, that's like just about where you start at, I guess, if I understand that right, of you either just got out of college, maybe you got a credit card, maybe you missed some payments, all of those kind of things.
That's a low FICO. That's a low
right.
second.
And then obviously throughout that process, there's certain particular things that an individual can do to increase their credit.
We have products, and that's just from an agency standpoint on that particular credit. So FHA allows you to do a purchase or a refinance with a FICO score anywhere from 500 to 580. If it's a purchase, they require a 10% down payment. Um, is the interest rate bad? I think it's relative. I mean, the interest rate is going to be higher than what it is market, right? But essentially, there's risks, and we can talk about how rates are driven, but rates are so individualized by the individual. FICO scores, debt-to-income ratio, what their type of product they're buying. So I think people are mesmerized by all that.
If I may, if when I think about somebody with let's say a 580 score, they may not be necessarily worried about the rate. It's more about get me to that monthly number that I can afford.
Sure.
They've recognized enough that they want to make an investment in themselves to gain equity, no longer pay rent, and really with where we're at right now and the cost of rent. I mean, just in the East Valley here, you probably can't get a decent place, 2-3 bedrooms for.
So let's take it to another level.
Okay.
So you look at the huge disparity between an individual who owns a home versus a renter, and the wealth is about 7 times more just by being a homeowner. Those are real statistics. So again, we really want to obsess on customer acquisition, right? These people are not being helped.
Mm-hmm.
They're not being, these people aren't seeing their ads on Facebook, get a mortgage, right? So it's not that we're a subprime lender, because I do loans for millionaires, I do loans for CEOs, and we have products for them too. But that's just one aspect of our business. But there's such an opportunity out there for everybody, and I believe in it. I think owning a home is a budgetary line item that everybody has.
Mm-hmm.
Everybody has to pay some type of housing expense. So why not put it to your advantage, right? Buy a home. So, but we have a diverse line of products. We can do $4 million loans with no employment ratio. We can do all the other stuff too. We can do interest-only loans. We can help people invest in their LLC and give them more protection. We can set up investors to have more than 20 to 30, 60 properties. We do cross-collateralization loans.
Wow. I don't even know what that means.
That means if someone owns 40 homes and they don't want to make 40 payments, we'll get one lender to put all those under one umbrella.
Wow.
Knock it out. So we can do a lot of different things. But going back to your question, that's really, when my partner and I got together, that's what we wanted to do. We wanted to be able to arm our loan officers with the ability to say yes.
Yeah.
Because that's important. I mean, you're an entrepreneur.
Yep.
And you want to be able to say yes, to the client and, to your referral partner. So
There's actually nothing that kills me more than not being able to help someone or solve their particular problem. But let's talk about like the average dude. I would consider myself the average dude, right? But I appreciate that. Luckily enough, had enough common sense and was in a good spot with my wife and I to purchase a home, purchase our house. So let's talk about that homeowner who has purchased that single family home, who's sitting on $4 or $5, maybe even $600,000 worth of equity that's just sitting there. It's untapped, it's unclaimed, and it's not working for you.
So I bring it back again. It's to the appetite of the client. I mean, some people feel that they should own their house outright. Some people, feel some type of comfort in that. And I think as salespeople, not only in the financial background, is that we forget to really think about that currency of our borrower. It's risk assessment, right? I mean, you're a guy who knows investments, and So people all have a different risk profile. Okay, now we can only do is consult them, and if you were to ask me, my personal opinion is I would never have that much in an asset that I couldn't navigate, right? So the only way to navigate it is to transact on it, which is either through a refinance or purchase or sell, right? So you think about that, and typically when you need money, when you absolutely need money, the chances are is that you don't qualify.
Yeah, it's kind of that Murphy's Law
Right.
situation. Sure.
So what happens is I have to ask somebody, do you really want to have that money or that, because that's real equity, it's equity.
Mm-hmm.
And you either feel that it's a real asset or you don't. And that's where you need to decide, and then you need to ask yourself, if you do believe it's an asset, then wouldn't you want to maneuver it? Wouldn't you want to be able to transact it? Wouldn't you want to have to be able to have access to it? So I think that somebody really needs to do, if somebody has that kind of equity and is wondering, God, what's going to happen, right? Because you can't control it until you monetize it.
Right.
So you can't stop the bleeding until you monetize it.
You've technically, you haven't lost any money unless you've ever sold and taken a loss on it.
So I believe in OPM, and I believe in leveraging your assets, because when you tie into inflation, I really don't want to spend my money. I'd rather spend somebody else's money that's giving me a rate lower than inflation, especially if it's on an asset that I'm going to gain equity on, right? So I have a different approach, and most people kind of feel the same way. I think it's just an investment type mentality, but I think that if you're not constantly thinking about harvesting whatever asset you have, whether it's in a stock portfolio or in a mutual fund, then you should probably solidify that. If you did a refinance and you pulled out $200,000 to $300,000 and you put it in a very safe vehicle, and the market did churn or something did happen, or I don't know, man, you gotta fix the water heater or whatever. Man.
Right.
You've got it, right? And
basically, like poop happens.
Right. And the thing happens is the house doesn't care what kind of loan you have; it's going to appreciate at the value of appreciation regardless.
Has our market right now, where we sit, has it peaked?
I don't think. I think it's going to appreciate, but I welcome the correction. I really do. I don't think it's a deceleration.
Mm-hmm.
I don't think it's a decline. I think it's decelerating to a point where now everybody's got an equal fighting chance.
You used a term there, market correction. Mm-hmm. I'm curious about that term.
Well, I look at it this way as, all right, I'll give you an example. Mm-hmm. So, and all my loan officer partners, underwriters out there, and everybody, real estate agents. So just 4 months ago, everybody was running to the fire. They were running right into the fire, Casey. They were like, take my dog. I'm going to pay $40,000 over market. They even had products.
No seller concessions.
Right, no appraisal contingency.
Right.
Nothing.
No inspections.
Just like, I'm selling my grandpa's coins. Like, they're just doing everything they could to get into the house. And then there was bad news about rates. And now
it froze it.
What's the difference? It was just 4 months ago. So my thing is there still the demand out there to buy homes? People still want to buy homes. People ask me, is it a good time to buy a house right now? Yes.
Yeah. It's always a good time.
And you know why? Yeah, because it's always a good time. But just 4 months ago, you couldn't even win a contract.
Yeah.
Now you have sellers that are very eager to help. They're willing to reduce the price. They're willing to give you seller concessions. Buy down. They'll give you certain money to buy down rate.
Closing costs, everything else.
Closing costs, right? So the way I look at it is, yeah, I mean, it's a deceleration that needed to happen because now inventories are starting to go up, right? They're slowly ticking up. Yeah, rates are higher. Rates are higher. Rates are higher. So let me say, so even if it was $200 more a payment a month. Okay,
What was the rate when you started?
it was in the teens.
Yeah. Yeah.
It was in the teens. But the thing about it is you really need to look at it, right? And say financially, okay, yeah, the payment was lower. It was low. It was we were doing loans 2.75, 2.5.
Wow.
Right, but you do a 2% increase, yeah, okay, it's $300-400 more a month. It's $100 a week. It's, well, you break it down, it's $25, $20 a day. Now, I know that sounds car salesman, right? Which I love car salesmen, don't get me wrong. But it's $20 a day to paint your walls whatever color you want, to put a mirror on the wall.
Yeah, that's cool.
Right, to let your dog do whatever they need to do. So, like, understand.
Essentially, it's freedom.
It's a lifestyle, my friend.
Yeah, I like that.
It's your kids. It's your kids having memories. It's more than just a transaction. The ethos is not about that. That's when we talk to clients. We say, hey, look, the rate is the rate, but let's really look at the big picture. What's the big picture? You got $400,000. Okay, well, what is it you want to do? Well, I'm thinking about taking money out. Okay, why?
Mm-hmm.
Well, I want to, do whatever it is. Buy a boat. I'm thinking about buying another house. So we consult them that way.
Yeah, like throw down. There's a number of different things, but Airbnbs, cabins, anything in between.
Well, no, and then ask yourself a question. Do you feel better kind of going to sleep knowing you got a couple of racks in the bank?
Mm-hmm.
That's a different currency, right?
Yeah.
I don't know. Well, I know what they call it. But that's money that makes you feel good. It makes you feel secure. And so we look at it differently from a currency that people really can't monetize other than feeling it. You know what I mean?
Yeah.
So that's how we take it. That's where I go.
So I can really feel and understand your passion in this, and I truly I appreciate your approach and your openness to have a conversation like that.
Mm-hmm.
What we've talked about your ideal client. We've talked about different scenarios in between. What type of partnership would you benefit the most from right now?
The partnership that I think I value most is working with agents. But that's our lifeblood. That's our lifeline. Being a loan officer, we depend on our sales part, on our real estate partners. And so that's really the best beneficial thing as far as just a hard partnership. But I work with a lot of self-employment individuals, a lot of self-employed CEOs, business partners, and I would think that those relationships have really kind of helped me maturate into, a better leader, right? So I'm talking from the heart, right? So having those relationships and being open to that has really helped Ethos. My relationship with my partner, amazing guy, Oscar. But as from a firm standpoint, we really focus on reciprocating back to our referral partners. And we've figured out the secret sauce to that.
Interesting.
Yeah, we have. So what we do is we partner up, and we're not waiting around for a referral. What we're doing is we're creating the referral. So we're out there getting pre-qualified buyers, and we're helping market listings too. So we really kind of, and it's not nothing new. A lot of loan officers and banks try to do that.
Sure.
But I think we've figured it out because we can generate a lot of different leads and work those leads. And even the leads that we have, we're so able to navigate the marketplace. We can get them into something, right? All we really need is an agent to show them where they're at. And that's a whole different vibe when you give somebody a qualified lead. They're like, hey, just go find them something, right? It's better that way. But, my loan officers appreciate it because they'll be able to manage that relationship. And I think what a lot of agents and referral partners in the past have told me is like, look, I give you all this business, but, hey, is there anybody you can refer me to? So I think we've attacked that in particular and approached that way by saying, hey, you know what, we're just going to give you stuff. And hopefully that comes back, but we're not waiting around.
Yeah. Well, I mean, who can afford to wait around?
You can't.
No, you can't.
Gotta hustle, man. Gotta hustle, and anybody right now who's afraid of being in the mortgage market as a mortgage loan officer, change your attitude, man. Get in here because now is the time. Because people are falling out because they don't want to work twice as hard or 3 times as hard to make the same money they made last year.
Yeah. That's the reality, though. I mean, Arizona's been hit by inflation, and that'll continue for a while. But like we've talked about throughout this conversation, it's a self-correction, and it'll come back around.
Yeah, the inventory's up, and inflation is never a good thing, right? I mean, we never want to overpay for goods that we've had, but you look at the last 10 years, and something had to happen. So to have a healthy financial market, people would disagree with me and say, well, the hikes are not necessary, but in reality, something needed to happen, and things happen all the time. They happen all the time. I was around when the Fed hiked rates. Sure.
Are we in for a 2008, 2009 scenario?
Not even close. The job market alone is, it's piped with jobs. Back when 2008 happened and CFPB and Dodd-Frank, they came out. Every bank's balance sheet is just filled with cash. The underwriting standards alone in the last, 10 years, it was really difficult to get a deal.
I think even the licensing process has changed, right?
They changed the licensing. I wish it was a little bit more stringent, to be honest. Because you and I, we took our 7, right?
Right.
I had my 7, my 8, my 24, my 66, 65. Those were hard tests.
They were very hard tests.
And I when I worked on my CFA, get out of here, man. But, the CFP was, compared to that, was easy. But I wish it was a more stringent thing because, people like to tell it's the biggest transaction you'll make in your life, right? It's the biggest transaction. Well, then, you need to have some education behind it.
Yeah.
And the fact that
especially if you're going to repeat the process every year and a half.
Yeah, and I'm okay with that too. People say, well, you shouldn't refinance. It's like, it's what everybody wants to do. People say, what's the best loan? It depends.
Yeah, whatever works for you.
Well, it really depends. It's like, okay, I'll give you an example. Right? So we had a conversation about this last week. It's like, well, what's the best loan? I said, okay, well, people say it's conventional. Why is it conventional? Well, because it's not an FHA loan, and when you start thinking about it, it's really dictated on what the scenario is. What's the FICO? What's your score? Okay, well, there's mortgage insurance on an FHA loan. Okay, well, if your FICO is a certain level, the mortgage insurance on your conventional loan is going to be a lot higher than it would be on an FHA deal. Second, an FHA, you go all the way to 56% on the back end. Where on a conventional, you might even qualify there. Second, the rate is different. The rate's a lot higher with a conventional with a lower FICO score. And what does that mean? That means lower buying power. I go on and on. But in reality, everybody who's been there, it's about the loan against the house.
Mm-hmm.
Right? So you hire professionals, your tax people, your real estate agent, your mortgage guy to help you guide you through that. But all in all, it's about what gets the job done. and then you can work back. So I used to be like that. I used to be like, oh no, and I would feel some kind of way, and I think everybody has. They've been on Facebook. That's wrong. What, you know what I mean?
Sure.
But I used to be that way. No, I'm not. Now, being a CEO, I'm learning a lot, and
so it's safe to say that perspective is a heck of a thing.
you got to, KYC, man. Know your customer. And if you're not asking those questions, then you're not really being a consultant.
Right.
And numbers are numbers, what they can fit in and what they can't fit into. That's 20%.
So you've experienced a lot of growth.
Yes.
You've got California, you've got Arizona. Are you covering anywhere else?
Florida, Oregon, Texas, Virginia.
Wow. What, as you guys continue to grow and markets change, and it can change depending on whether you're in Florida, whether you're in California, whether you're in Virginia, wherever, it can change along with the products, right?
Yeah. Well, there's a lot of new products coming out. Fannie Mae recently came out and said that now they're going to allow lenders to do their own down payment assistance programs instead of the municipalities, HFAs.
Oh, right, like
right, like Home in 5.
the Home in 5, yeah, through Maricopa.
Matter of fact, Bank of America came out. It was just today. They said they're going to have a zero closing cost, zero down payment loan.
I really feel like that might be interesting to see how that private money is backed.
It's kind of, you think about it, it's kind of scary.
Yeah, a little bit.
But hey, if you help somebody in, give me a call, refinance you out of it.
There you go.
So, but yeah, back to your question. You'd be surprised the regional markets and the difference in the people that you're working with there and what requires. I'm doing a loan right now in Miami, and sitting on a golf course. It's a beautiful home. It's like $810,000 sales price, but the HOA, the golf fees are like $84K, bro. That's right, $84K, right?
The HOA is $84,000 a year?
You have to pay like a membership fee.
Oh, okay.
$84,000, and I'm like, what?
I mean, considering some country clubs, that's pretty. I guess that's a pretty reasonable entry point.
So the reason I bring that up is because down there, homeowners insurance, and you're a homeowner.
Yeah.
So the homeowner insurance, I believe, is tied. It's being affected by some type of claims that they had on the rooftops or whatever. So my client had, she wasn't. As a matter of fact, we got her from a credit program. So she wasn't aware of what was going on. We got the quote. It was $9,000 annually.
Wow.
And she was like, oh my gosh, freaking out, right? So I said, okay.
The HOA was $9,000?
No, the HOI, the homeowners insurance.
Oh my gosh.
They're like, really? It's not like Versace mansion, bro. It's like, but so yeah, talk about different regional stuff. In Georgia, there's so many multi-family homes there, right? Texas is different. Is it a cash out or is it not a cash out? All my underwriters out there, what's a cash out, always a cash out. So yeah, there's different things, right, that we market to, and Texas has a specific program for veterans, Texas Vet.
Sure.
And so yeah, it's different. And there's exotic products that people like to kind of bag on, but they serve its purpose, man, in the marketplace. And
quite honestly, the fact that you just said that they get bagged on, that's awesome, because I haven't heard that since I was probably 19.
That's eight bear markets coming out right now.
Stop bagging on my products, man.
They kind of step on it because either one, they can't sell it, so it's not part of their arsenal, and two, they don't understand it.
Yeah.
And that's bad, because I mean, entrepreneurs, self-employed individuals think differently, or, you know, you made a job change that really affected whether or not you could buy a house. And, and there's risks, right? There's opportunity risk, and there's legislative risk, and there's risk in everything that people don't really understand. And what we do is we try to layer that into all our questioning because it's important.
Yeah, being able to layer that all into every aspect of the loan and the situation. Because they're the one who has to live with it,
Right.
which means they have to love it.
They don't have to love it. I mean, they have to understand it. There's all the transparency that we provide to them to say, okay, listen, I'm going to give you everything that could happen and everything that could potentially bad happen. But, some individuals, like for instance, I had a client and, they were hit by COVID. Her business was hit by COVID really bad in 2020.
Wow.
And in 2021, they carried over a net operating loss. Sorry if I'm starting to be too technical, right? So she had a huge loss that she carried over her taxes.
Yep.
And so, some agencies require 2 years, some agencies require 1 year. And even with the 1 year, with the most recent, even though it was better, it was still negative income. So she had literally negative income on her taxes.
Really?
So people are going like, what? What's that? That actually does happen. So, her business was back booming again. It's 2022, and right. So, but she's not gonna file her taxes until the end of the year, and she was renting, and we got our house. People are asking, well, how'd you do that? Well, we did it with one of these exotic products that people bag on, and we did it, and ultimately, she bought a $1.7 million house. And never
crap.
thought she could.
Wow.
Now, and the rate was still kind of banging too, because right now jumbo loans are pretty high too. So it was right around the jumbo loan thing.
So that's considered a jumbo.
Yeah. Well, yeah, this would be a non-conforming, but it was a good deal. It was a really good thing, and it was something that she never thought she could do, and we got it done.
So Ethos right now, Ethos Home Loan is in growth mode, safe to say?
Yeah, well, so Ethos, as you know, recently I was in the hospital.
Yeah.
So coming out of that, I had a different lens, right? I had a huge different lens. And this was an initiative that me and my partner had, is to start getting people involved and hire loan officers. And here's the thing, loan officers are important for our business, but it has to be somebody that's willing to match the effort or have the effort that I can match, right? So leadership here works for the staff. And that right there is something that's a mandate. We're here to support everybody.
Yeah.
It's not the other way around. It's what do I got to do to help you be successful? Tell me this, what you need to be. Do you need more education? Do you need help? Do you need me to call somebody? Do you want me to get on the phone?
Right.
So that's our approach.
So really going through and making sure that you're being the sales manager. Right? What are the next steps here? What can I do to help?
The staff runs Ethos. Ethos is a community. It's an ethos of individuals who want to get better and enjoy, their job. Again, I talk about currencies you can't monetize. These are currencies that you come happy to work. You don't have to punch a clock. You believe in what you're doing.
Mm-hmm.
Right? Your boss isn't a jerk. Well, I could be a jerk sometimes. But understand that that's what we want to do. And so, yeah, we're in growth mode. And like I said, come out of the hospital, I knew that I needed to kind of step back a little bit because I'm involved. Like every loan that comes through Ethos, I pretty much underwrite or pre-underwrite.
Mm-hmm.
Sometimes we'll have so many loans, I'll start processing them, man. I'll start calling and making HOI requests and ordering flood and And I'm not afraid of, I've done everything in this business, you know, and I've underwritten, and the only thing I hadn't done was own a company, and now I do. So
there you go.
But
what would you tell either a new real estate agent looking to get involved in real estate, again, in the perceptive market of this is gonna separate the men from the boys, those types of things, or at least that's the thought process. What would you tell a new agent getting involved? What would you tell a new mortgage broker?
Sure. So, number one rule, okay, and this is for all sales, probably not just. Number one rule is production cures everything. And you need to understand that from a lender standpoint, a manager standpoint, right? So being a full commission employee, you need to understand that production cures everything. It's what have you done for me lately? And you need to understand that to survive and navigate through this world, because ultimately that's what it's about, unless you're a true independent. If you're a true independent, then you're free, you're a solopreneur, right? But I would say the biggest thing that you need to focus on is, even if you're thinking about going in there, think about who are you going to work with. And the main ingredient in every business is customers.
Mm-hmm.
And you need to think about who your customers are going to be. Where are you going to get your customers? What do they look like? Typically birds of a feather flock together. And so you need to really understand that. And everything else, you'll figure it out.
Yeah.
And it's by repetition. It's, I played baseball. I was a little athlete back in the day. But
what position did you play?
Second base.
Okay.
I played short, but then I was too small. But anyways, enough of that. So you get in there and you take reps, right? You practice. You practice, you practice, you practice, you practice. And then you implement what you learn. And then you implement it, and once you see that implementation work, then you have confidence.
Mm-hmm.
And once you have confidence, people will start to gravitate to you because they'll see it, they'll feel it. If you're new, don't let anybody tell you, I don't want to work with you because you're new, either. You gotta have a little bit of, make it fun, man.
Have some gusto, have some machismo.
Have fun with it, man. Be like, have fun with it. Because here's the thing, is this business, especially this business and investments, the margins, the amount of income that you can make is transcending, man. And then when I say that, I mean, you can talk to a lot of people. It is transcending to not only you as an individual, but to your family, and the knowledge you gain, if you could pay that forward to, like, I have grandkids, and I got my kids.
Mm-hmm.
It's just, there's so much more than just ripping a commission. And I think that's what people don't talk about, is that it's that currency. This is what Ethos is about. So what we want to do is we want to provide that stuff, that unspoken stuff that people just don't, they take advantage of. They don't think about it. So that's what we try to do with our company. And we could do a lot of stuff. We could do all this stuff, Academy and all them do. But give us a shot, because I think you'll be happy.
I like that. Yeah. AJ.
Yes, sir.
Phenomenal. I have really enjoyed our time together. I've enjoyed the process of getting to know you, not only throughout this conversation but in past conversations. And I know that you've gone through some health issues, and so my family and I are definitely praying for you, and we hope for the best for you and your family.
I appreciate that, and I enjoy the show. And
thank you.
I like what you do, man. I know takes a special person to shine light on everybody else, especially when you're an entrepreneur yourself. So everybody go see this guy. He's one of the good ones. And here at Ethos, we recognize that. And love you, brother.
I appreciate that, AJ. Thank you very much.
You got it.
Thank you for being here.
You got it, man.
Well, actually, thank you for having me.
That's right. We're here.
I like it. I like
Location.
it.
All right.
Awesome. If you'd like to be featured on Casey's Corner, please like, subscribe, share this video and podcast. Thanks very much. Have a great day.